Now, let me introduce the panelists. We have Michael Green. Michael is the host of a show called The Flip Factor. It's a podcast that's available to everybody and definitely worth a listen. Michael is one of the most prolific flippers I've met. And I said this, before everybody got here. A few of you heard me say this. There are some people in this country that I believe are better at flipping houses than I am. Michael is one of them. This guy's got it going on. I've had him on the Flipping America show. I'm so impressed with what he does, what he reads, what he knows, how he puts things together, how he is building his business. Profound respect for you, my friend, and thank you for joining us here tonight. Chip Cagle is next to him there on the panelist list. Chip is the Chip, I'm just calling you a top producer for Bay Mountain Capital. His little, I don't know, with your region, your team, whatever, you're accounting for half of all the volume that the entire company does. This guy's knocking it out of the park with hard money loans and rental loans all across the Southeast. And Chip, I'm going to, since Bay Mountain is one of our sponsors, I'm going to give you an opportunity in a few minutes to tell us a little bit about your programs, because we definitely need to remember that. Chris Larsen is next. Chris is sitting right there. Lean into the light there, Chris. You look like you're in a little shadow. There you go. All right. Chris is, it's Next Level Income. That's the name of your podcast, right?
Yes, sir.
All right. Next Level Income. And he has the Next Level Income coaching program. And basically he teaches, he buys multifamily. He teaches multifamily. He syndicates multifamily. He buys them all over the country. And he tends to buy the A-rated properties, right?
Yep. Yeah, we go for basically anything built in the last 20 years. So B plus, A minus, A.
Okay. B plus. Okay. All right. B plus and above. And Helen is, okay. Helen is, your name that's showing is Helen Chadwick.
Sorry.
That's okay. Everybody, this is Helen. She leads a virtual wholesale team that is making offers, I think, in 15 states now? And
close, almost.
Okay. And growing every day. And she really runs the thing. It's really impressive what she's put together and how they are making offers on properties in all these states and keeping up with everything. And it's really impressive and fun to watch, and especially gratifying since Helen is actually a product of our training program. She came through the program and she's out there knocking them dead. I love to see it. And Karen is also one of our students as well, but she's not here with us. Okay. So Chip, the first question, I'm going to have you lead off with the first question, because, your company does a lot of market research, and you told me you were going to contact Will and Wayne and see what they might say to this, but where does Bay Mountain Capital and or Chip Cagle see the real estate market by the end of the year?
We think it's going to be strong. In fact, we think it's going to be strong for the next 2 or 3 years, mainly because right now the inventory is so low that the properties that are available, they stay on the market for a few days. Days on market is literally days now instead of weeks or months. And the rates, the mortgage rates right now are at historic lows. And so people are able to buy houses that may not have been able to afford it before. And so therefore, people that are flipping houses have a great market. And that we project that that's going to continue.
Okay.
Where we are concentrating our efforts are the Southeast and the Southwest, because that's where it seems to be growing.
Okay.
People from the North are moving down. People from California are moving out and moving to those areas.
All right. Now, Michael, you're in the Baltimore area. Tell us what the market's like where you are in the Mid-Atlantic region.
Insanely good. So best market I've seen. I've been doing this 12 years and just by far like no market ever like this before. I was very fortunate. Me and Roger talked a lot about this in the beginning of the pandemic, and we're all a little nervous and trying to feel our way around. And I had about 13 or 14 flips going on. So I was kind of like, I think I told you this, was like, let's see what happens with those before I'll kind of listen to the news or make any decisions. And the low inventory, like Chip said, and low interest rates just kept everything going. And really really just one of the bright spots in our economy has been the real estate market. And I agree with Chip that I see it going for a while. So Baltimore has always been a solid market. We don't go up and down as much since we're next to DC. We got a lot of government work, a lot of, and very, what we call like essential workers. So we've always been a really awesome place to flip houses. So very, very excited. This year has been by far my best year. I've doubled my net worth in 1 year, due to the fact I can't travel. I'm just nerding out on flipping. I literally am just going insane. Like, I don't think I've ever worked more because I have nothing else to do. Can't go to, travel, go to Disney, do any of the fun stuff, but I'm loving life, man. And Baltimore's been great, but honestly, I've not really seen any of the real estate economies that haven't been doing phenomenally well. And I foresee that going on for quite a while. I don't know how long, but what I have done a lot of research, and what I do believe is that when we do start to change, it won't be like an overnight event. It'll be something that happens slowly but surely over time as they raise interest rates. So we'll just adjust along the way. So I'm really feeling good about the next couple of years.
All right. One of the things that I do at the end of every year leading into a new year is I start reading the reports from sources like Adam Data and Mash Pfizer and these places that compile the data. On one of those lists, Baltimore was in the top 5 best places to flip in 2021. So yeah, I thought that was interesting. I thought of you and Pat Dornan when I read that. All right. So now the hot market creates some real challenges because with so few days on market and limited inventory, what do we do to find properties? Helen, what is your team doing to locate properties? Because you keep on getting them over and over again.
We look everywhere. We use all the online tools available to us. Facebook. We look at all the online foreclosure markets and see what we can do to make bids on those. And then we try to make low bids. As they say, you make your money on the buy. So,
yeah, you're doing a lot of bidding on with the HUD Home Store.
Right, through HUD. A lot of foreclosures.
Yeah. And I guess probably we should all take note of the fact that many of the properties that you guys get under contract are not anywhere near metro areas. Now, you all know that I know Helen, and I mentioned earlier that I'm doing a flip in Elkmont, Alabama. Well, I bought that from Helen's team. And
actually, that's been part of our strategy. We found that there was, in the bigger markets, there's a lot more competition. So we actually moved out of some of the more major metro areas because you couldn't get a good buy on them. We couldn't get a buy that we felt made sense for an investor, and that was our target market. Now, they're not always investors, but they're often investors. Thankfully, HGTV and Fixer Upper, a lot of homeowners are willing to, if you can, resell or at a good price that a homeowner can afford to put some in it, they see the value. And there are a lot of homeowners out there that are willing to put the sweat equity in. So we have a market beyond just investors.
All right. So if I summarize where we are right now, the single family market is hot all across the United States, even in small towns. And maybe everybody ought to think about moving out of town a little bit, going into the secondary markets or the surrounding areas. Okay. But we've got a multifamily guy on here, and I got you here on purpose, Chris, because I know you're a nerd, dude. And I know that you watch the data. And so you are as prepared as anyone to tell us what is happening with multifamily in 2021.
You're reading my mind, Roger. I was writing down some notes here. So, I'm a data guy. I'm a nerd. I was in math club. I went to band camp. I'm guilty of all the above here.
Math club.
Oh yeah.
And band camp.
And band camp. I mean, I'll challenge anybody. Go on. So, and I'm an engineer. So I'm a data guy. I moved to Asheville, North Carolina, because I stack ranked cities across the United States before my wife and I moved here to start a family. So, one of the things that we know is we can go back to 1850 in this country. You can see that real estate goes in cycles, 18, 19-year cycles. And you can listen to me 12, 14 months ago, and I talked about the upcoming pullback in the market. I didn't predict the pandemic. If you did, then you probably had inside information in the government. But yeah, I'm a data guy. I am a commercial real estate guy. I agree with all the panelists. I think it's going to be really strong because of the inventory, because of the low interest rates, because of the millennials that are moving in and forming households. But I think it's also going to be region specific. I notice you don't have anybody here from New York. You don't have anybody here from San Francisco. If you're in some of these dying regions like the Northeast, like the high tax low quality of life states, then you're going to be hurting a little bit. You might be able to make some money short term, but you really need to have your antenna up. So what we focus on when it comes to the multifamily market is the regions that are growing. Love the Southeast. I moved here for the demographics, so I agree with everybody when it comes to that. From a long-term perspective, focus on the numbers when it comes to that. So I think as we look forward, you look at the trends, you look at where baby boomers are retiring, you look at where millennials are moving, you look at where the jobs are going to be, and that's going to be places like the Southeast, Texas, Denver. These areas, they're going to offer a better quality of life and low taxes. I wrote an upcoming blog post at nextlevelincome.com. You can check it out in about 2 weeks. It's going to be there. If you subscribe to my blog, you'll be able to get that as well.
I love this. He writes a blog post and he's 2 weeks in advance. I'm more like, if I'm writing a blog post, I got to publish it in 15 minutes.
Well, you send me an email. I'll send it to you before it's published. How about that?
Yeah. All right. Well, I think Michael would raise his hand and agree with me. We are both closet nerds. We are nerds. We just try not to look like one, right?
I'm like one step under Chris, but you know what I mean? I'm almost
why I grew
there.
The beard. I thought the beard made me look less nerdy. I don't know. Am I wrong? Should I put my glasses
no, you
on?
actually look like a true Asheville resident right now.
That's
part
right.
of that artsy-fartsy community there. All right. So what do you guys, this is for anybody, what do you see changing in the marketplace in 2021? Is anything going to change? If so, what?
I mean, so for me, obviously, I think there's been a teeny bit of a slowdown just in general. I mean, elections, all the weirdness going on, people are worried about raising taxes, things like this are going to happen. With that being said, I don't get overly excited about it because I feel like every time one door shuts, another opens. So a lot of my focus over the last couple months is I've really been paying attention to politics, not because I care about politics, but I want to kind of get a feel for how it might affect our environment. And, and then I kind of got a little upset because I was like, I don't know if the new president's going to be exactly favorable for business, but then I was like, whatever he's not favorable to, this is always the yin and the yang. There'll be another door that opens because of it. And as soon as I made that shift, I started trying to figure out what I think is going to go up because of him. And I do think he's pretty good for real estate, right? I mean, a lot of how I make money is, people buy houses, they get in with no money down. Because they're no money down, they got no skin in the game. Chip would understand this because, they don't really have a lot of skin in the game. Well, they don't pay. And then guess what? It gets on HUD Home Store, Helen gets to buy it. And that's our life cycle. And that does seem to be a more democratic backed thing. So I was like talking to my girlfriend tonight about it. I was like, we'll probably there'll be some favorable things that happen for us. We're very, very blessed and lucky that we're in real estate right now versus the restaurant business or, some of the other things that are being hit pretty hard. So I'm excited for 2021. And I think that we'll have great opportunity simply because there'll be some things I think will be favorable, but I'm keeping my eye open for any new opportunities too.
I'd concur with that, Roger and Michael. Yeah, I think that, if you look at Biden versus Trump, the stuff I was reading was that Trump would be favorable for multifamily and that Biden would be favorable for single family. And I agree with that. There's going to be, more largesse when it comes to those home buyers, maybe a little bit challenging from a landlord perspective. We'll see how that all plays out, but certainly, I agree, Michael. And that's also, you got to be cognizant what markets you play in. So, talking about that K-shaped recovery, I think we need to be careful painting with a broad general stroke. And we need to say, hey, maybe you focus on, some of those entry-level markets, Michael, where you're talking about no money down, where the government's going to assist them and get them in. And I would also caution people to look back and look at the early 2000s and say, hey, what was going on back then when they were encouraging home buyers to get into the market and what happened afterwards? And you can learn from history because it certainly repeats itself.
Chris makes a good point. I just want to add on to, so I don't, because he's right. The context is super important. And I found that as I did a lot of research that high-end properties and super low-end properties not really being where it's at, but safety being in, the person that works at Costco or nurses, where are they going to live at? Because the essential workers, the people who do have security through ups and downs with the pandemic, it seems to be like that's always been the focus, but now it's more clear than ever. And then being in cities, like you said earlier, Chris, because I definitely was leaving out, I would not be overly excited to be in New York or California or any of the cities that people are leaving from. But where are they going? That's the big question.
Okay, Helen, what are some new territories your team is looking into?
you talking about?
Starting to make
Oh,
offers and buy houses.
We're staying in the Sun Belt, and we're moving off of, I said this before, we're moving off of the major markets. There just seemed to be too much competition there. But also, a lot of these institutions that are foreclosing, they're ready to get rid of the market, of the properties in smaller markets. So you can often pick up a better deal there. So that's what we're looking for. Smaller, mid-market, and smaller probably.
Well, I know you're going to stay in Alabama, but what other
Roll
states are
Tide.
and Florida and Tennessee? Yeah. But what other states are you looking at?
North and South Carolina,
Oh, okay.
Louisiana, Texas, Arkansas, interestingly, remains very livable cost of living, maintains their strategy, hasn't been too hard hit by all of this.
All right.
So, and actually, some areas, okay, depending on your strategy and what you're going to do with your property, for instance, there are, if you're looking for buy and holds and rentals, you might be looking at some of the larger, older major. Well, we found a lot of houses around St. Louis, Metro St. Louis, both Missouri and Illinois.
Okay.
St. Louis is in both states.
Right. Right.
They do have different laws that govern them, but there's a strong market there on the low end. Well, what's low end for us?
Chip, where's your company going next? And if you know why, tell us why.
Yeah, so I'm over the Southeast region, and right now we're doing Georgia and Tennessee, and just about to add Alabama, Birmingham, and Huntsville. Also in Tennessee, we're expanding. We're going to be doing Memphis and the Tri-Cities area, which is up in the northeast corner, real soon. I want to get to Nashville, but we're on hold for that for a while. Anyway, but beyond those, we're going to Florida next. And the reason for Florida, as I was mentioning earlier, is a lot of the Northerners are moving to Florida, Georgia and Tennessee too, and Alabama. But Florida especially, Florida's seeing tremendous growth of people coming in from the north and from California. A lot of the companies that are fleeing California right now are going to Florida or Texas. So Texas is where the company is based, and they expanded a year and a half ago to Oklahoma. And next in the Southwest will be Arizona, Nevada, and Colorado. Okay.
And I guess Will and Wayne have some specific reasons for those markets.
Because they're growing. Same thing as we were just talking about. One of the things that Will was thinking happened during the presidential election, why Arizona switched sides, was because of a lot of the people that moved there from California and the north.
Okay.
Same thing about Georgia even.
Yesterday, we on the call at noon, I talked for a while about a phenomenon I've labeled the Zoom boom. And that is people have discovered they can work from home. And a lot of them tend to never go back to the office. How does this impact your business, or does it affect your plans for 2021? Anybody?
Yeah, Roger, I actually just got off another podcast here right before this one. West Coast podcast, so it's a little late here on the East Coast for me. But one of the things, so again, it's a little bit of a different market, but I think you know this is something to consider if you're adding amenities or you're looking at things that you're marketing. One of the big things that we offer now in our communities is high-speed internet. So we're becoming the high-speed internet provider. So if you're working from home, you want high-speed internet.
Yeah,
and,
that's true.
You know, we're able to undercut the local providers, like in this area, Charter, Spectrum, but wherever you may be, and provide internet service it easier, one bill along with the rent, and then at a lower price. So if you have partnerships that are out there, if you're doing things, I would encourage you to look into things like that. Also, the amenities that you're providing in your properties. Again, considering what we do, but it's maybe people don't want to work out in a gym. And if you could do like time segmented sections in with an amenity there or green space. So when you're looking at those areas, I would say if you're looking at places for longer term holds, as Helen was alluding to earlier, look at those places with a higher quality of life, lower cost of living. Those are going to be areas that are going to continue to draw people into those areas, for the next couple of years, I believe.
Okay.
For me with the fix and flip, I've noticed that there's been a big uptick in having like 1,200 square foot Cape Cods, and then we completely like finish out the basement and throw 2 bedrooms and a bath down there, and take a 1,200 square foot home and turn it into a 5.3. And it's not super big like master suites and stuff, but my belief behind the feedback we've been getting is people knowing that they don't want to go to the gym anymore. So having these extra rooms could become an office, could become a gym, and it's not exactly the most desirable thing to go out and work at a gym and touch stuff with people anymore. So I'm noticing this big push to like, squeezing and really being like kind of like designing a tiny house, but being really thoughtful of designing the space and kind of using that architectural creativity. And people are really loving it. And we're then obviously with the lack of inventory, we're seeing a lot of things go for 20, 30, 40K over list. And, our 30K deals are turning into 60 and 70K deals. And that's been the reason for having such a great year. Did the same amount of flips, but tripled our income because we're seeing some really, really big upside. But I have found that the houses I've been able to squeeze more in have gotten more of that emotional feel where people are willing to kind of open the checkbook up and pay as much as possible for it.
How do you get them
Love
to
that.
appraise?
So we meet them, we give them comps, and we've had some of the craziest comps we provide, but we find if we meet people, we really have, some dialogue with the appraiser. They're pretty lenient right now because they know we're in a really fast growing economy. So a lot of times they're being lenient, but we meet them, we tell them where we want to be. We, recently we gave comps that were like 1,800 square foot for a 1,300 square foot house. And the guy's like, okay. And he appraised us. So it's not saying it works every time, but by meeting them and putting a personal face, really showing them the work we put into it, letting them know that we had 12, 13 offers, because commonly we do. And I think for an appraiser, that actually indicates value, that we didn't just get one sucker to pay too much. We literally have like 10, 12 people, and the numbers are fairly close. All right. But we are often well above any of the comps that existed 3-4 months ago. And I think that they understand that because they know the market's going up faster than the comps can produce.
Now, the other 3 have already talked about expanding their territories. What's Michael Green planning to do territory wise in 2021?
So I'm a big proponent, and this is my nerdiness, but I wanted to move to Florida and do more in Florida, but I think that was more because I wanted to be in Florida and I love Florida. But I realized from a business standpoint is that there's so much opportunity where I'm at that there's just room. I've been on this big thing we talked about before, scaling down, profit up. I mean, I had a point where I was doing 150 houses a year. I'm on track to do like 30 this year, but my profit is like triple when I was doing the volume because I'm doing more, but I'm taking each house really serious and being really thoughtful about it. So I don't need to leave Baltimore. I realize I can run my business remotely with Zoom and all these cool tools, and I can just go to Florida anytime I want. So I'm not really going to expand because I really believe in taking what's working and really expanding profits more than really, growing the business. I've been through the scale thing before, and it feels like there's this law of diminishing returns. So I'm all about like squeezing more out of what's in front of me. And that's been a new thing for me in the last year and a half.
Okay. But you could probably build the same thing in Florida, right? There's opportunity there.
I have a hard time when I get distracted. It waters me down. I don't know if anyone else feels that way, and this could just be specific to me, but I'm more like the laser beam works better than the flashlight, right? For me, at least. And so I get really distracted. I have ADD, and I mean, I'd love to get into multifamily, wholesaling across the world, hard money lending. I could do it all, right? But I make more money when I don't.
Every year, one of the top best cities in America to live is Minneapolis, Minnesota. I see that on the list every year. And I can't help but think, I don't think anybody that's doing that list plays golf or rides a motorcycle.
Yeah.
And for those 2 reasons, I don't want to live in Minneapolis, Minnesota, because I don't want to enjoy those things for 2 weeks out of the year and then suffer.
Ice fishing.
Yeah.
Ice fishing.
There's some good golf courses up there. Michael, I'll agree with you though. I was born in Baltimore, and if I'm distracted, I get woodered down too.
Yeah, exactly.
Okay. Getting into local dialect.
Roger.
Hey, there's
right,
2
y'all
of
want to hear
us.
local dialect? Let's get Helen.
I grew up in Severna Park, man. So I feel
cool.
You.
Yeah, Pasadena, man. I'm right next to you.
Not play Balmer, but
Yeah, well, I'm right next to you. Pasadena is where I lived at, and I just moved from there recently.
Oh, yeah,
hon. Yeah, right there. Awesome.
All right. So, okay, guys and gal. Sorry, Helen.
That's okay.
What is the biggest challenge we're going to face this year? Chip, you go first, then Helen, then you other guys. Biggest challenge you face, Chip, in your business, in the hard money loan business. You can
Yeah.
make it specific to that.
The biggest challenge, well, I think I'm going to have difficulty in that growth because I'm already overwhelmed.
Right.
Yeah.
Too much opportunity.
But that's a good thing. That's a good thing, right? But I'll have to get somebody to help me. Maybe Helen will come over to my side.
I don't know.
Anyway, but yeah, as far as the business, I think we're going to be in good shape this year. I'm not really expecting challenges from being able to find people that need loans.
Okay. Helen, what's the biggest challenge you face in your business this year?
Funding. To follow Chip on that, love to find more funding partners. And also because we're kind of young and we're growing it's the unknown. And I would say that one of the greatest challenges that we have is mitigated by Roger. If you can afford to get his coaching program, get it. Because I was one of his students. It has been invaluable. There's no one else you can call up or text or email and ask him something, and he not only knows the answer, he gives you some of the other information around it, like, well, why are you asking that? And, oh, if that's what you're trying to do, then why don't you think about this, this, and this? And having that at your fingertips is just invaluable, especially in a market that is kind of changing. It's been a really hot market for a long time. What is going to happen if it starts to turn? What strategies do you need to be in to handle that, other than being diversified? But as you've heard from some of the other panelists, if you're too diversified, you can actually kind of trip yourself up because you're trying to be an expert in too many subjects. So, what's something close to that would work for you? I can ask Roger for things like that, and he knows. That's the amazing thing. Instead of going, I'll think about that too, he's like, rattles the answer out. 3 or 4 options on them. So,
all right. Well, I appreciate that. Okay. Thank you. Biggest challenge you faced this year, Chris, in your business?
Yeah, I would say competition. If you look at the bigger markets, there's a lot of liquidity floating around. There's a lot of novice buyers that are in there. So I'm gonna piggyback on Helen. If you're looking to get started, the best thing you can do is find a mentor. Find somebody that's done and emulated the success that you want to achieve. Roger's a tremendous resource. The community he's built is tremendous, and don't fall into that. So that's the flip side, right? Like don't be the competition that's making the choices that are not going to set yourself up for success over the next 5 years. Because there's so many opportunities that are out there. You just want to make sure that those first few deals that you do, they don't have to be home runs, but make sure they're singles and doubles, and you learn the methodology to set yourself up for success. And that's what we're focusing on is, when those offers, when we put those offers in, they're not accepted, we just move on to the next one and we stick to our parameters.
Yeah. Okay. Now I was surprised by that answer, and I'll come back in a minute and tell you what I thought you were going to say. But Michael, your biggest challenge for 2021?
I mean, 2, one being taxes, obviously, and I'm probably going to need to get into some rentals, even though I'm, like to stay focused on what I'm doing, because I need to get some tax deductions, especially if this new tax plan comes down sometime in the future. I'll be well above the 400K. That's one. But then I agree with Chris on competition, and I've been taking a way different approach to it. I realize depending on how good you are at something, you don't really have a lot of competition when you start getting really good at it. So for me, it's going to be staying humble. I got a lot of experience, and thank you for the compliment earlier, but it's going to be staying a student and being still willing. I have a coach just like, Roger, and getting a coach like, what you're offering, Roger, is just one of the greatest things out there. And we have talked, you're a smart dude. You got a lot to give. And, that willingness to be able to work with someone as closely like Roger, be able to get that help. For me, I stay with a coach even today. Like I'm constantly constantly getting coaching because I need to remain humble. And I always see that to be my potential biggest weakness, is thinking I know everything or I don't have anything to learn. So for me, it's about staying humble. And I think that's the big thing. And when we do, competition gets a lot easier, because competition's whatever we make it. We certainly, most people I find, especially in house flipping, very different for Chris because he's playing with the big boys for sure. House flipping, a lot of people take this as a weekend warrior thing. It's a really kind of get rich quick for some people, don't want to put a lot of work in it. It's a fantastic business where you can be okay at it and make a lot of money. So there's a lot of room to be able to like work with someone like you, Roger, and actually get great at it and really eliminate competition because you're just many steps ahead of them. So that's going to be what's big for me, is kind of just improving my game even farther.
All right. And I will add to what you just said, Michael, too. I have two mentors that I go to regularly still in my life. I've been investing in real estate now for 18 years. And one of my mentors has been at it for 30 years. And the other one's been at it for 50 years.
Wow.
And they are willing to spend time with me. And one of them has also been a trainer, done the seminar circuit as I get into training to try to build my programs that have a lot of meat and a lot of integrity and maybe not all the salesmanship. It's just been wonderful to be mentored by people like that. And so I try to give in return as well. So thank you for all those kind words. But now, Chris, I kind of thought that really your biggest challenge, or one of the biggest challenges you might talk about, is the ban on evictions. Michael, do you have any rental properties?
A couple.
Okay. Helen, not yet. Okay. And I've got people that are supposed to be paying me that haven't been paying, but speak to that a little bit, Chris.
Well, yeah. So certainly that's not missed, and that has to be something you're cognizant of. And we tend to operate in more business friendly states, but yeah, that obviously does hurt your NOI in the short term. We are fortunate. So we have moved up the food chain in terms of quality of residents. So the markets we operate in, with those B+ A- assets that we've targeted, 1,000+ per month rents, our collections over the past year have been 98%.
Wow.
So we have mitigated the risk through our strategy, in my opinion.
The national average is 75% right now.
Yeah. So we're well above that. So I'm not saying it's not gone. It's certainly a challenge. And I think that also presents an opportunity because there are some operators that, have not been as focused on that. When we buy a property, we are doing a full audit and we're looking and assessing and we're stratifying the risk factor. So, if we go in and 20% of a property is service industry based residents, that's something we're going to shy away from. So what we found is the high risk residents, that correlates almost 100% to the collections that we deal with.
Okay. So you're not renting to a lot of people in restaurant or hospitality industries.
No, that's low single digits in our properties.
Okay.
Yeah.
All right. And not meaning to be discriminatory or unkind at all, but those people are suffering.
They are. And look, I live in Asheville, North Carolina. I can see it out my office window, and I have tenants, I have friends that operate businesses like that, and believe me, it causes me a lot of heartache to see what they've gone through over the last year. I won't go too far down that, but no, it's not forgotten.
Yeah, we drove the Blue Ridge Parkway a few months ago, back in the fall, leaf looking, and as we came through Asheville, I thought about calling you.
Anytime, man. We got an Airbnb. Check us out.
Well, oh, really? Okay. Well, see, I didn't think about it. I had enough time to, not be last minute, but that's why I didn't call you. But all right. Now, Michael said something earlier about not chasing the shiny object. And it is my privilege as the host of the Flipping America show to talk to so many people doing so many cool things that, and you guys that host your show, you probably talk to people that you think, oh yeah, no, I better not do that. I don't have enough time. I'm just going to get myself distracted. With that understanding, let me ask all of you, is there anything that you plan to do differently this year, or about the same as last year, or more of the same things you did last year? What's your answer to that?
I'll jump out first. For me, obviously, every year I look at what really worked and what didn't, and I try to eradicate the things that didn't. This year, the things that worked really well, worked phenomenally well. So it's going to be all about getting rid of the stuff that actually worked pretty good and probably would have made it in most other years. And that's hard to do when we get rid of things that are making you 25K. That often feels like a good win, but I really need to get rid of those to make room for the 50 and 60K opportunities. So I'm focusing more this year on rehabs that have upside. So I'm noticing patterns to, like just what Chris said, almost the same kind of pattern of like where he focuses on who to rent to. If I can get in a neighborhood where it's largely with people who have good jobs, good credit, and feel really secure about the market, we're noticing we're getting more upside, and upside's what I've been really focusing on this year. Because I'm never, even today, I get very excited about making 25K, but I now have to be cautious of taking a 25K deal because it fills I only have so many resources, and it takes a spot on the bus, and I need to make sure every one of those spots makes me the most money. So that's what I'm going to be focusing on this year for sure.
All right. Wise words. Okay.
Yeah. I will say, Roger, we did one deal in the first 9 months of 2020. And, what we're focused on this year is keeping the momentum going into this year and making sure, again, we're doing more of the things that we can control, because I think, we're in an opportunistic time, and, this may not last. So you have to figure out, like Michael said, figure out what works, figure out the high profit areas, eliminate the rest, and take advantage of the opportunities that are presenting themselves today.
Yeah, that's awesome. We did one deal, but I just want to remind everybody, your one deal, the checks involved had a lot more zeros at the end of them.
That may be true. Yeah. I mean, doing 4 deals a year versus 40 a year, it's a little different, but I think, the point is, Roger, if you can focus on the goal, but you can control the inputs. So you can't control the outcome. Yeah. You can control the inputs. So if you're looking and you're thinking about getting started and saying, like, what do I do? Focus on the fundamentals. Obviously set your goal out there, but then every day habits create success. Just remember that.
But every time I talk to you, I kind of get that shiny object thing, because I did 80 deals last year, and I was with my show 3 times a week and this meeting twice a week. I was busy. And I'd kind of like to be a little less busy sometimes. All right, Helen.
I don't know if we're less busy, but we do less deals.
I just like to be less busy than I am, I think. Although I don't know what to do with myself. I don't really have any hobbies. So, all right, Helen, you raise your hand.
Planning on taking advantage of technology to scale up. I'd say probably the best thing about the COVID and everything, people are a lot more willing and have figured out ways to use technology to do things you used to have to do in person. And so it's more efficient and less expensive. And then the other thing is we've done really, we've done only wholesales. I'm ready to do some fix and flips. So that's what I'm excited about.
And I'm standing by to guide you through your first fix and flips. Helen actually is a lifetime member of the program. She didn't do the 6-month thing. She did the lifetime thing. And I'm very happy about that.
And I plan on living a long time and taking advantage of it.
I plan on living forever. So far, so good.
I was thinking you need to get less healthy people in that program, Roger. You're going to go broke. She's going to live way too long.
No, what I've noticed is the lifetime members, the longer they're in the program, the less they actually need me. And the more they become a resource. Like Helen is now a resource to other people. And so they help the program, just feed itself. All right, Chip, it's up to you now, buddy.
Roger, we should have gotten somebody else to monitor the chat and these numbers, because I'll have to admit I'm a little distracted trying to do both.
Oh, yeah, that's right. I'm sorry, man.
Crazy. But I just sent out a list of everybody's guests, and check it and make sure that the number that I have there is correct for you, or if I missed anybody. All right. What is the question, Roger?
When you think about your plans for 2021, is it going to be more of the same, or the same, or what you did last year plus a little something different? And if so, what's the little something different you're going to do?
I'm hoping it'll be different. I started with Bay Mountain in March, which was right before the lockdowns. So I really haven't been able to do what I would normally do with trying to find borrowers, going to all the RIA events and the meetings, the networking meetings and things. There are a few that have been live in the last few months that I'm able to go to. But I miss that. I miss the one-on-one networking a lot. These Zoom calls are good, but you need the one-on-one face-to-face type stuff. So I want to get back to that this year. I'm hoping that this vaccine can knock out the problems we've been having and that we can get back to the way business was done before.
Yeah. All right. A little history lesson here. I want everybody to be thinking about your final word of encouragement, because I'm going to come back to you. The Flipping America RIA was not really ever part of my life plans or goals. I'll tell you how it happened. About 3 years ago, Diana and I moved to Midtown Atlanta 4 years ago, and I found this little Italian place a few blocks from the house, and I liked it. And so I decided I was just going to go to lunch there every Wednesday, because one of the things we said when we moved into the city was, I want to go someplace where I can be a regular, where they know my name. Some of you are old enough to remember Cheers.
Yeah.
And so I started going to Baranda every Wednesday for lunch. And then I just started telling a few people, hey, I'm at Baranda every Wednesday for lunch. If you want to come by and talk about real estate, that's fine. Well, a few weeks there were 2 people there, and sometimes there were 6, and sometimes there were none. And then it got to be 10, and then it was 15, and then it was 30, and then it was 50, and then it was back to 15. I never did know, but we would have 15 to 50 people every Wednesday, and a totally informal thing. And that's when Gordon Katz said, you know what, you've got the makings of a RIA, except with your national audience, you ought to figure out how to make it a national RIA. So I think I took the good vibes that we have in that weekly event, and we started doing it on Thursday evenings too. And that's why we do meetings on Wednesdays and Thursdays, because I used to do Wednesday at Baranda and Thursdays at City Tap. Come by and sit and have a drink with us, and let's talk real estate and just have a good time. And the City Tap thing was growing too. When the pandemic hit, we had to come to the Zoom calls, and that's actually been an okay thing for us, because, we've invested in some technology to get better at the delivery of the content, and it's opened up the ability to have all these groups around the country. But I'm with you, man. I miss just hanging out with people. I don't really go into those meetings looking for anything other to meet somebody new, help somebody out, raise a glass with a friend, and talk real estate. Because like I said, I don't really have any other hobbies. That's where we were. Okay. I want to do a final word of encouragement, and then I'll wrap up the content part, and then we're going to find a winner. So make sure you are explaining why you are worthy and picking a number.
I'm not even reading those, Roger. I'm sorry. I can't do that.
Can't do what?
I can't read what their reason is and keep track of the numbers and everything.
Okay. There's a lot of numbers in there. So Chip, you know what? I'll let you go first with your final word, and then you can start looking through the chat, and we'll
try to come up with a winner.
Yeah. Well, the truth is, we're not really going to evaluate their worthiness. All right.
You're not going to name a winner tonight?
Huh?
You're not going to name the winner right now?
Oh yeah, we're going to just base it on the number.
The number. Okay.
Yeah.
All right.
I want to hear why you're worthy, just because, but I don't really care what you say, as long as I know that you're going to do what we say. All right. Ready?
Yeah. So my final word is, as I said at the beginning, I think this year is going to be fine. Maybe even the next 2 or 3 years. We may have a glut of foreclosures if they ever lift the moratorium on them, but I think it's just going to be a bump in the road, not necessarily a big downturn.
Sounds like you've been listening to my show.
Yeah, like we saw in 2006 through 8. The biggest problem we had back then was that there were people that were owning houses that probably shouldn't have owned houses, and so once those started collapsing, everything collapsed. We don't have that situation now. Right now, the number of people that own residential homes, the percentage of people that own residential homes is right in line with what is normal historical percentage. And so I think we're going to be fine this year. Looking forward to it.
Awesome. All right. Helen, a word of encouragement for the masses.
A couple. Sorry, I'm a lady. verbose.
You get 2
I
words.
would say persevere. Don't give up. It's like Nike, just do it. But also, I would say I cannot tell you how valuable it has been to have either a coach, partner, or team members. Team members, I do believe, make better decisions. They help you spot things you might not spot. They're going to help you think of things you might not think of. They might know resources that you're not aware of. So whether it's, an informal group you belong to, or if you can, find a partner who's willing to get some skin in the game with you, because then that makes their decision making much more weighty. I think, but I do, and I have found the encouragement you can make, because you're going to make a lot of bids and offers before you get a deal, and you need someone to encourage you to keep on doing that, and you also need someone to say when you finally get one and you're so excited, and then they point out that's still not a deal, and you have to say no. That sucks. So I'm all to say persevere, but also get you some team members, whether it's a coach, a partner, whatever, to help you make good decisions and keep on going.
Michael. Thank you, Helen. Michael.
I mean, look, this is a big year, and just because I said a lot about how great I think it's going to be, I think the big play this year is becoming great at what you do and ruthlessly cutting costs and becoming more minimalist, being focused on keeping things down. And you're not going to do that on your own. You need help from someone who has experience, because right now, when done incorrectly, there's so much money lost in house flipping that you could just be bringing back to the table. I believe you need that money as a tool to be able to make stronger, better offers so you can win in this competitive market. So if you're not working every day to make your business better, more streamlined, more efficient, you're not going to make it in this economy, and you're going to need help to do that. So I agree with Helen, everyone else, you need support with that.
Okay. Good words. Chris.
Yeah, absolutely. So mentors, focus, ruthlessly cut out, what you can do. And then ultimately, I like to tell my coaching clients, put your 3-year vision in place, decide what you want your life to look like, find the people that are going to help guide you there. And then again, focus on what you can control. Last year was a perfect example of this. You can get distracted. There were so many excuses last year on why you weren't successful. So what are you doing every day when you're getting up? What are the habits that you are creating that no matter what happens, no matter what deals you look at, you're ultimately creating a pattern that's going to allow you to be successful, not just in 2021, but into 2031.
Thank you. And I'm going to wrap up the content portion of this evening with what I say at the end of every one of my episodes of Flipping America. Can anybody tell me what I say every single time as we're going off the air? No pressure or nothing. That's not what I say. Every single show, I yell out into the microphone as the music is playing and we're fading out. I yell out, "Keep your eyes open." And then Kathy Curtis comes on, our MC, and she says, "You've been listening to Flipping America." And at this point, everybody's turning it off, I know. But she says, "And remember, keep your eyes open. Opportunities are everywhere." I say it every time. And I have for years. In fact, when I have a suit made, I'll where you have the monogram inside where you can put your name, I don't put my name. I know my name. What I put inside there, I have monogrammed inside my suit. Eyes open.
Love it.
Very, very good.
Because opportunities are everywhere. I get a real kick out of reading these lists about the top places to flip and the best places to own rental houses. And it's a lot of fun to digest the data and look at their metrics and see what factors they weighted and all that stuff. But the truth is, if you know what you're looking for, opportunities are everywhere, all around you. Wherever you are right now, there's an opportunity. You just got to be persistent and looking for it. Amen.